everybody. Hunter Satterfield here, one of the partners at CWA, as well as the Chief Investment Officer. As always, I am joined today by my fellow partner, Brian Bortz, the head of the KWAR's Investment Committee, as well as Brad Sanders, the Managing Director of Tectonic Advisors. This is your April market update. For the month of April, the S&P 500 was up 10.5%. Yes, that's just for 1 month, with global stocks up 10.1%. We're going to break down a little bit of the makeup here in just a second, so stick with us on that. Domestic bonds just up about 0.1%, and then global bonds up 1.3%. So truly an interesting month, especially given a lot of the things that are going on in the world. So we've got obviously conflict in the Middle East right now. We have continued disruption in the tech markets with things like AI. In addition to that, we have a new Fed chair coming. In all likelihood, we've got sort of maybe a shift and a change in kind of what the Fed has been doing from a policy perspective. So a ton going on, yet we still had a great month. So Brad, I want to start with you. Maybe talk a little bit about the equity markets. How did we have a month like that, given all the narratives that are circling in the world?
I think it's a combination of a few things. I think it's easy to forget, since the war with Iran has been going on for 2 months now, that we had a really hot economy going into that. And the economy is still, for all intents and purposes, chugging along and is running much hotter than I think anybody anticipated. So underpinning kind of the geopolitical news is an economy that's kind of full steam ahead. And the earnings we've seen from even large and small companies alike are showing you that. So I think most of the returns are due to that. I also think the market has learned, especially now we're near, what is this, 6 of Trump, that it looks ahead a lot more than it used to because of the way he tends to do business. So you'll say something and then backtrack the next day. And I think the market has learned to discount that. And I think what the market's telling you is this conflict's going to be over a lot quicker than I think most people think. And so it can kind of look past the higher oil prices in the short term, look past what you would think would be heavy upward pressure on inflation, which may cause rate hikes instead of rate cuts. And the market's telling you we're not going to get a rate hike, and oil's going to be down into more neutral territory by mid to late summer, and this inflation will be a blip. And so that's what the market's telling you. Any disruption to that will probably get some more volatility.
Yeah, and I think it was actually interesting, Brian, as we come over to you. So yesterday, the S&P had a wonderful day, up 1%. But inside the S&P, if you deconstruct it, the Mag 7 was actually down over 0.5% for the day. So much of what carried the S&P, were the other 493 names. And that's a theme we've talked about throughout this year with our clients, that there's this broadening of the market. So you want to talk a little bit about what does that broadening mean? Is that healthy for the stock market? How do we view that in our portfolios?
Yeah, so before I do that, I just want to clarify, being up 10% for the year, right? That was 10% for the year?
No, for the month.
We had a month at 10%. Okay. So let that sink in for a second. But what happened with that is that leading into the month of April, we started talking about in our last investment update, how there started to be more of a broadening of the market. And the first part of the year, when the Mag 7 had pulled back and the S&P was down, that our portfolios were actually up. And a lot of that has to do with just the broadening of the market and how we are invested. So keep in mind, and this is what I talk to our clients about, is that we're not concentrated like the market is. And when you have a broadening and a deepening of the market, meaning more than just 7 names are performing, then you start to see a different type of performance and a much healthier, stronger economy. I think I also talk to my clients about the fact that there will come a time, much like Brad just said a second ago, where the market is pricing in that this disruption in the Middle East is going to be fairly short-lived. There will come a tweet out at some point, and oil will come down and the stock market will go up. And if you look at where we are right now, I think that tends to say that we have a very, very strong economy that is not just based on one sector, technology, and it's not just based on 7 very, very large technology companies, that most of the other companies in our economy are starting to show strong earnings and rebounding as well.
Yeah, I think one of the things we talked to our clients about, we talked about this in Nashville at our annual meeting this year, is that AI has this unique ability to be sort of a horizontally enabling factor across the entire economy, meaning every business can utilize AI in really strategic ways to drive profitability, to improve revenue streams, whatever else it is. We see that here, both at Kane Waters and Tectonic already, and how we're integrating it into our business. And so when you talk about the broadening of the market, the importance of that is that when you introduce technology that can actually impact everything, not just the big 7 or the big 10 or the big 15 names, you have all of these opportunities to now invest in other places of the market as well. So thematically, that's what you'll hear from us a lot on the podcast. We'll be recording with Brad next week on some of the things that we've seen in the market with a little bit more sort of deep dive on things. So in addition, we'll have, in all likelihood, a new Fed chair by the next time we record. So we'll be back in front of you with a little bit more color commentary on the fixed income markets at the end of May. Hope you enjoy the May flowers that arise. Thank you so much.